And good morning, everyone. Welcome back to NeelyFX. My name is Michael Neely, and this is the channel where I talk about foreign exchange trading, prop firm trading, building expert advisors for the MetaTrader 4, MetaTrader 5 platforms, and just in general, making more money and becoming better traders. I study all this stuff so I can become a better trader, and then I share it with you so you can become a better trader. And it's a long process, but it's hopefully it'll be a fun and rewarding process. So, without further ado, let's go ahead. Since we're talking about taking money and placing it at risk, there are risks you need to know about, and here they go, something like this. First, this channel is for educational and entertainment purposes only and does not constitute trading or financial advice. I'm a professional trader, not a broker, trading my own capital. I do not solicit funds, manage client accounts, nor do I hold CFTC or NFA registration at this time. I have held NFA registration in the past, though. Forex trading is highly speculative with a high risk of losing some or all of your investment capital. Only trading the funds you can comfortably afford to lose. And here's the CFTC risk disclosure. Forex trading carries a high degree of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before trading Forex, consider your investment objectives, experience, and risk appetite. You could sustain a loss of some or all of your investment capital. So with that, let's go ahead and see what's happening for today. First, let's talk about me some more. Here are my expert advisors that I have on the market right now. We've got two of them. There's a couple more right there. I should probably put these out as free because they're pretty easy and they're not very refined, but I should publish those as free. But we have the what is that? The Bollinger Band and RSI Mean Reversion Pro and RSI Mean Reversion Pro for the MetaTrader 5. Here we got a couple more. The moving average and MACD confirm. So that should be good. I should probably drop those prices down to free or drop them down a little bit more, $37 or something like that, and see what happens with that. And test the pricing on this too. So with that, let's go ahead and get into the my next thing. This is tradingforexforprofit.com. This is my website for stuff like that. And this is the new Market Pulse page I'm working on right now. Doesn't that look exciting? That is not what's going on today, but it is very colorful and very nice. I want to make it so these change with the change where they are on here, depending on where they are and currency strength. So that'll be the next feature we add into that. In the meantime, so I highly recommend going to tradingforexforprofit.com. You can come in here and start for free by clicking on that button and building out your profile and stuff like that. You can decide what trades you're going to use, pick your strategy, choose your strategy, develop your strategy yourself, test your strategy, and then see if it works, if it doesn't work. There are lots of strategies out there, but a few of them work, and none of them work 100% of the time, so keep that in mind too. But with that, let's go ahead and get into what we're looking at today. First, with the news section, we have Producer Price Index coming out today, which right on the heels of yesterday's hotter than usual CPI report, which is showing inflation coming up about 4.2% right now. Just a lot hotter than we like it. We like it around, well, 0 would be great, but that's, I've never seen it that low. Under 1% would be excellent, but we don't see it, we haven't seen those numbers in a long, long time. But they're still not as bad as the Biden, what we had under Biden, which was right here. And not making a political statement here, just showing you, these are the years he was in office, okay? I mean, it's kind of a, not making a political statement, but he was the president during when all that happened. Oh, it's not his fault. Maybe, maybe not. I don't know. I'm not going there. At any rate, let's go ahead. It is the fault of Congress, though, congressional spending, which has gone through the roof. COVID-19 gave Congress the opening, and that's both sides. I'm not saying Republican or Democrat. I'm just saying that both sides decided to start spending in trillions to see what would happen. And that's what happened. It kind of wrecked the economy. We also had the Canadian bank hold yesterday. Not a shocker there. I think don't we have the euro this morning? We do. 8:15, we got the euro main financing rate coming up and monetary statement to follow. So the EU, as it's called in the chat rooms, the euro versus the dollar will be flat today. We also have PPI coming up, and then the ECB press conference coming up at 8:45. So lots of fun happening around 9 a.m. New York time. That's time Gentlemen, start your bank accounts or start your trading accounts. It would be a fun time to see what happens. So with that, let's go ahead and get into the market sentiment for today. The currency strength meter, the USD is on top, Canadians on the bottom, and the euro is somewhere in between. British pound is a little bit under. The Aussie is showing a good bit of strength today. But as soon as we stop bombing Iran, I think we'll see these switch, but maybe my trade will come into place. I am, full disclosure, I am in on a trade on the Aussie right now, coming in on the buy end around 1720. I'll probably be 70.20, and I'll show you what that looks like in just a minute. The neutral side, we have right here the baby pips risk-o-meter, risk on and risk off meter. I highly recommend using baby pips, especially if you want to learn more about trading Forex. Right at neutral right now, everyone's sitting on their hands trying to figure out what's going to happen next. So with that, let's go ahead and get into here. We don't want to see silver yet. We want to see the US 10, the Japanese 10. US 10 is right here. And it is coming off a little bit more, 4.52%. Like to see that coming down a lot more, but in the meantime, we'll see what happens with that. Japanese 10-year. The reason why I'm focusing on the Japanese 10 years is because of the carry trade. The US dollar versus the yen carry trade has been a big deal for decades, and that is starting to unwind. And when that does unwind, the dollar versus the yen should come down, should come screaming down, possibly 6,000 pips or so. It's going to be huge when that does happen, but we are not there yet. And to illustrate this a little bit better, the US 10 and the Japanese 10 are converging, but they are not quite where they would need to be to start unwinding the carry trade. The carry trade is starting to unwind a little bit on the European and the Great British side, but we're not there. We're not there yet, and their interest rates I think are higher than ours. I think. Where's the EU10? Yeah, EU10 is there. Wow, Great British Pound yen is 4.9%. Yikes. But at any rate, enough of that. Let's go ahead and get into the next currency interest we have. That's going to be the euro versus the British pound. And the euro is expected to raise rates, which would mean that it will go up in theory. And that's it's going to give us 86.30. That's in theory. It could go lower than that, but it is at the bottom of this range. So it's been somewhere it has been before, and should start seeing the euro showing some signs of life against the Great British Pound. DXY is right up there at 100.12, so we should start, again, that is being fueled by the active military campaign we have in Iran right now. We'll see if that continues. Here we have the euro versus the dollar, 15.27. It's kind of hanging out, waiting for something to happen. Probably interest rate change. So we are expecting a interest rate increase to 2.4%, and that should help that currency a little bit more. Here we have the pound versus the dollar, 133.58. Again, might have a rate decision coming up soon on that. I'm not sure, but it's awfully settling in just above big support right here, 133.31. Don't expect it to drop much below that. Dollar versus the Swissy is right here, 79, stuck at 80 and right at the top of that range. That might be a good time to get underneath that. Again, not trading advice. However, it is my opinion that it is at the top of the range. It might be a good time for I just pull back on that. It did close above the Bollinger Band area just a little bit, and then it's closing. If it closes underneath this Bollinger Band area today, that might be a good mean reversion setup. Going to the southern side of that, or the downside of that. Dollar versus the yen, right there, top of the range, 160.53. Perfect setup for the Japanese interest rate decision coming out on Monday, Sunday night, Monday, 15th. I think it's 15th on their time, which would be Sunday night our time, I think. So should be some fireworks coming up on the dollar versus the yen. I do have trades set up at 160.20. As far as sell stop, and just we'll see if those come into play. It should be a good time if they do, because it should be 100 pip, 200 pip winner. Pound versus the yen, 215.45, settling well below highs. However, well below that trend line. It's just not really going much anywhere right now. Euro versus the dollar, euro versus the Japanese yen. Again, even more of not going anywhere. Canadian versus the yen, and look at that. It is stuck right there in the middle, and those are the tiniest Bollinger Bands I've ever seen on a yen pair, and since I started paying attention to this really closely about a year ago. Crude oil. Crude oil is coming off again to 89.22. Peace breaks out. We'll see if that falls down to back to around 70. Boy, wouldn't that be fun? Dollar versus Canadian. Breaking the top of the range here. 139.81. Breaks 140, we could see it go to 141, which would be the November 2025. Again, it's a low liquidity trade compared to the euro versus the dollar, but it might work out. This is the trade I'm involved in right here, Aussie versus the dollar. Seeing if that little candle right there will turn green, and that'll give us a very nice mean reversion setup to go higher on that. Again, we're looking for dollar weakness before that happens. Gold. Massive dollar strength. Gold coming down. Looking for support just under 4,100. Let's see if we can find that. So far, it looks like it's doing a good job of holding that support, but it didn't hold here. And it didn't hold here, and it didn't hold here. So it's we could see further devaluation of the precious metals. Platinum coming down again, looking for support around 1665. Palladium looking for support around 1252. Silver breaking 64, looking like it's it's testing 64 right now. See if you can find support at 64. That would be fun. Although the next stop, if it does not hit 64, find support there. Next stop is going to be around 54. So we should see another $10 slide in silver if that happens. In my opinion, that is time to go buy some more silver and get some more of it. I love silver, and silver is one of my favorites. Software sector, everything's to the downside. These are the stocks that I watch, including HubSpot, which is one of my favorite to watch crumble, and Salesforce, another one that I enjoy watching crumble, with their market cap falling apart. This is what happens when you forget who your customers are. They thought AI was their new customer and catered everything to AI, and completely forgot that they were completely alienating their small business customers. So with that, that is all I've got today. If you have any questions, by all means, hit me up in the comment section. If you want to see more of these videos, then subscribe to the channel. I'd love to have you. And if you want to see more of these videos, what's the other one? Oh yeah, if you like this video, hit the thumbs up button, and we'll be sure to make more of these. I'm going to make more of them anyway, because it's what I do. But you guys have a great one. Happy trading. Talk to you later. Bye.